welcome to the latest episode of Hung Chin Hon, Sweatin Money. Now, here's the full disclosure. We may or may not have ownership in other positions in the stocks mentioned on this show. Don't buy stocks based solely off of what you hear off this podcast. And always do your homework and research before buying and investing in stocks. I'm your host, Kong, along with my co-host, Gibson. Oh, well, why is that always short? It always just cuts you off.
I don't know.
Okay,
We're
well.
going to do it faster. Gibson.
I'll find a way to slow it down. Anyways, let's take a look at what's in the news. So Match Group, the parent company who owns Match.com, OkCupid, Tinder, Plenty of Fish, Medic2, Arton, blah, 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 has filed for an IPO and says it's most likely worth $3.1 billion.
What? I read this morning it was $425 million that they're raising. Well, I guess they're raising that much, but they're worth more, and they're giving about 10 to 15% share of the company.
I think so, yeah.
Yeah, it's definitely kind of interesting. I mean, now you understand how much money they're probably making in the process of those two dating sites, or those multitude of dating sites, which I do ponder. There's a lot of like alternative dating sites out there as well, and I wonder how they stack up against it. And perhaps, like how popular these platforms is a reflection of how the dating paradigm has changed since basically when we were young,
Yeah, pretty much. I mean, I haven't really used like all their services. I mean, like especially like Plenty of Fish or, whatever. But, OkCupid or Match.com. I've never used Match.com either. But yeah, not something for me. But I did take a look at one of the co-founders of OkCupid. He had a book called what is it? Data analytics or something like that. It's basically a data analytics book on the research that they did with their site on OkCupid and to see what tends to be the things that people to lean towards. And it was pretty interesting.
I think what's most surprising about this news article is the fact that the same company owns Match.com, OkCupid, Tinder, and all these other sites, which seem to be competing sites. So in a way, isn't it kind of like competing against themselves? They're kind of galvanizing or cannibalizing on their own selves and their own traffic? In
a certain way. I mean, I think some of the algorithms that are used from OkCupid eventually end up in the other sites' algorithms, and it kind of helps them. And plus, there's specific targets that they're going towards. Like Tinder, of course, is more specifically for people that are like, quick hookups or whatever, as opposed to, say, Match.com, which tends to be more long-term relationships.
Yeah, because the way I kind of see OkCupid, Match.com is a paid-for version of OkCupid, and OkCupid is free.
Yeah.
So why would I want to pay for a paid version of something I can get for free? And then, I don't know, but I think it's interesting. I'm just not sure. I do think the stock might take off on the IPO day. I think it's a strong possibility that it could take off.
Yeah, but as far as what we've seen so far with a lot of the tech stocks, it tends to just tank for whatever reason. Like LinkedIn, Facebook, Twitter, these have all tanked thus far. And then, eventually they do go back up. But initially, for some reason, they just tank. So I wonder if that's going to be the case with this company.
I think part of the effect of that is just that the people who've been investing in the company for such a long period of time, like the angel investors, the VCs and whatnot, this is their opportunity to sell off that stock that they held for such a long time with basically no return. And now that's IPO, they basically try to milk it for all it's worth. So if people are willing to pay exuberant prices, like $100 for a dollar stock that they have, then they're basically going to take it. So for them, it's 100x return. For everyone else, it's like, what the fuck? Why did it tank? There's a lot of factors that are involved in it, but the only force that can make a stock tank really is if a person is willing to sell the stock. And you can't sell a stock you don't own. So I imagine maybe they owned the stock and they sold it on the public market.
Yeah, that might be it. Well,
yeah,
we'll see.
I don't know, but I think it merits more research for sure. I think I would definitely look into the stock and see if, like I would look into the reports. I'll look at, what's their filings and seeing if they're actually making money, and then whether or not they're going to do a dividend or what their plans are for the company.
Yeah, we'll see. Yeah. And former bond investment manager for Pacific Investment Management Company, PIMCO, William Gross, says that the company illegally fired him and that they owe him some money. The firm is moving the courts to dismiss the case. Any comments on the situation?
I dealt with a lot of legal litigation recently, That's a pain in the ass. And I
Yeah.
don't know.
Yeah.
I'm not sure you can do that, but if you can, then maybe we should all consider our past employments and get, hey, you shouldn't have been able to legally fire me. I've always thought it was an at-will employment.
Hold on. You want to be careful here. Isn't your boss listening on to this? Or will be?
And
Okay. If you don't care.
I don't understand.
Okay. Whatever.
Yeah, I thought employment's, well, to my understanding, employment has always been at will. So I believe these exceptions might have been for executives with golden parachutes or something, where they're under certain conditions, they were to leave, they'll get a lot of like payoffs or something.
Well, that are people in unions or whatever. But hey.
Yeah, I don't know. Who knows? I don't understand. Yeah, I'm not too sure what it means for anyone.
Yeah. All right. Well, retail giant Target says it will stay open on Thanksgiving Day up until 6 p.m. So screw you, workers. We got to milk every customer for their money.
We need that money.
Yep.
Give us that money. That's what it's saying to us.
Meanwhile, Citi analysts take a look at 3 big retailers, Costco, Walmart, and Target. Summary, it doesn't look good for Walmart. Costco beats out the others in sales and growth with a very good balance sheet, and Target's margins are low enough that they still make a significant profit, and they have the value. Key things to note, of course, I do own stock in Costco and Walmart, of course. Have to mention that.
Well, congratulations on the Costco. My condolences for your Walmart.
Pretty much,
Yeah. Walmart's been closing shop left and right all over the place.
Oh, yeah, man.
So then, I mean, that's not good news. I mean, that's not signs of a very healthy company. Yeah, we're making so much money. We're going to close a few more stores, because we're making too much money. That's never the case,
Yeah.
So for them, them closing the stores might have been a sign that they were overly ambitious and there was a sign of overgrowth and misallocation of resources, and now they're just trying to recoup from that.
I think it's more than just that. It's not necessarily an overgrowth issue because they've always had an issue of placing their stores with their reputation. I mean, they're known for kind of making deals with governments to get lower taxes on the land that they own, and then before they even move into an area, they're met with massive protests. At least out here in the West.
Mm-hmm.
So that's one issue. And then, I mean, I think the thing with them is that they're having a tough time struggling with where they're going with their company. Are they going to continue to be the low price, low quality retailer, or are they going to try to maybe upgrade that? And they've noticed sales drop in their in being the low price guy, and then they try to do the whole Walmart thing. That didn't quite work out. So then they're kind of switching back. And then where do you go from there, though? I think they still haven't found their footing.
Well, for me, Walmart has always been the low price guy. I mean, of course, the even lower price guy would be Costco. I mean, Costco is really where you get the most bang for your buck.
Yeah. So why is that? Do you think that it's because Costco is able to make up some of that money with the membership that they have?
Well, I remember a long time ago when my lecturers in my university I was attending basically said that Costco doesn't actually make their money from the things they sell. In fact, they do employ a economic model for pricing called the packaging model.
Yeah.
And basically still make monopoly profits based on packaging and so on. But more on that another time. But they supposedly make their money on land lease. So before Costco moves into an area, they buy up all the land around the Costco.
Yeah.
Then they plant the Costco in the middle and then sell all the land or lease all the land to everyone else. And then that's where they make the money. Which pretty ingenious.
That is ingenious, but I mean, not all Costco locations are able to do that.
I'm not too sure, but I think it's a rumor that might be worth looking into.
Huh, okay.
Which would be a very, very brilliant idea if you have the money for it.
Oh, yeah. I mean, but that is tough to do. I mean, especially in this area right here. I mean, if you're going to buy a building on one of the busy streets, Valley Boulevard.
Mm-hmm.
Dude, I checked it up, man. It's at least $5 million for this one location.
Yeah, but, back when Costco was Price Club, how far back was that?
Yeah, true.
And then for them to acquire the land then, back with the area with the crime it was then, was been extremely cheap.
True.
And now it's worth apparently $5 million.
Yeah.
That's craziness.
Yeah, no, that's a good idea. But I mean, yeah, Walmart, I mean, they're going up against, Costco. Not only that, they're going up against Target. And then, of course, they're losing a lot of their sales also to Amazon.
Yeah.
So.
Yeah, and do you remember Kmart?
Oh, jeez. Yeah,
what happened to Kmart? That's exactly what happened to Kmart. Hopefully that doesn't happen to Walmart for your sake.
It better not.
Or you could short. You could short your own stocks.
Might be an option. I'll have to think about that.
We'll have to entertain it later.
Yeah. All right. For those of you who have Alibaba stock and are regretting, fear not, says Palwasha Saim. She says that the party poopers, I should say, don't know Alibaba's full portfolio of money-making businesses, although they are famous for being China's eBay for businesses and also owning other P2P auction sites. They also own a film company and a moving streaming service that generates tons of money. This, despite Jack Ma's statement that he wouldn't crack down on the counterfeit product merchants that make his site so popular. He says he doesn't want to take away their livelihoods and likens the recent lawsuits against his company as a form of bullying.
Well, I'm curious because as a company that's trading in United States stock markets, transparency is something we should all have. And if the company's really making a lot of money.
He's very transparent about the fact that his site has counterfeit products and, merchants that sell that sort of stuff, and he doesn't want to close them down, which actually can very much hurt his company. I mean, he's already been regretting the fact that he listed his company on U.S. stocks on the U.S. stock market. But then, of course, when he does that, that then means he has to uphold by America's standards, and especially its IP standards. And the thing that makes his site so popular is the fact that these merchants exist. But then, when you do that, I mean, you're not going to be very popular with the people that depend on that sort of IP. You mean the brand names, the Gucci's, all them. And I mean, in this case, Gucci is specifically suing Alibaba because Alibaba is not doing its job as it's supposed to in cracking down on these counterfeit products.
Makes sense. And remember, Alibaba is tied to Yahoo stocks. So if Alibaba goes down, Yahoo's going to tank with it.
Oh yeah, for sure.
I would say, I mean, given that type of news, I wouldn't say outright short the company, but I think this is a company definitely that is a straddle call by my definition. A classic straddle call.
From day one, the moment they listed on the NYSE, I said, short this. I mean, Alibaba, Jack Ma couldn't even get his listings in Hong Kong for whatever reason. And that's what most Chinese companies do. And because of that, he then went to the New York Stock Exchange. There's something wrong with the management in this company. Jack Ma may be a genius in most areas, but at least when it comes to listing his company and in the stock market, in the Hong Kong stock market, he screwed up so bad he couldn't get it listed on there. And now he's saying that he's regretting the fact that he even listed in the U.S. stock market. And on top of that, now he's made his company legally liable for providing counterfeit products. Because if he would have just said something like, well, these are merchants that are selling things and I don't have the ability to screen all these people, then okay, he can provide himself with cover. But the fact that he comes out and says, well, I'm not going to deal with this, and I'd rather lose a case than to acquiesce and make a deal with these people.
And this is why you hire PR professiononals.
Yeah, well, PR and a bunch of freaking lawyers, but apparently he doesn't have that or doesn't care to need them anyways.
He only has so many billions of dollars there, Colin.
Only so many
billions. I think he's like the second richest guy in China now, right? Or possibly the richest guy in China.
I can't remember. I mean, usually you don't want to get on that list because usually if you're in the top 10, that's when the government starts cracking down on you for like corruption charges.
Oh, no, apparently not. They're celebrating this guy. Like, this is what hard work can get you.
Yeah, apparently
this is what you get by selling counterfeit products all across the world. The title of the second richest man in China.
Yeah, seriously. Well, anyways. So there's a lot of speculation about the supposed Apple car. Jim Gorzolini, Forbes, says an upcoming Faraday Future may be a secret front company working on behalf of Apple. He also notes leaks of Apple's Project Titan, which has poached automaker employees and engineers, and how Apple has met with California's Department of Motor Vehicles, possibly to hash out details on getting a self-driving automobile tested on California roads.
Yeah, you know what? Not excited.
Really?
Google's been there. Google's been there a long time ago.
Yeah.
One of the first people there in that space. Tesla's recently entered that space, and Apple's like, I want that space too. I'm just thinking with the billions of dollars at Google's disposal, still can't fully crack it. I'm not too enthusiastic about the possibility that Apple or Tesla can crack it either. And not only that, but Apple has always been a late adopter of new technologies. Like the NFC chip, like NFC reading is kind of slow. They're very difficult to get develop apps apps provisioned for and developed on. So yeah, I don't know. By the time Apple finishes a product, it might be like 4 generation smart cars in before they're like, oh man, our cars also drive themselves.
Well, if you're going off of, say, the Android Wear versus Apple Watch technology, then yeah, you got that. But historically, I would say, at least, well, maybe this is all history now, but at least under Steve Jobs' reign when he came back, you have to keep in mind Apple actually is not necessarily the great inventor, but they are the great innovator, and they are good at adopting new technology before it even comes out. For instance, they were the first computer company to even adopt the USB standard way back when. I mean, for their blondie blue iMacs, if you remember those, the
Mm,
bubble shaped thing with the colors.
oh man, let me think.
No,
No, I
no.
can't remember.
Oh well.
Oh wait,
Anyways,
wait. Is it the clear blue, the clear one with like the blue and gray?
egg shaped thing. Yeah, yeah, yeah,
Yeah. All
yeah.
right.
Those.
Oh yeah, that's right. I
Yeah,
guess so.
and then remember it was portable because it had a handle on the
Handle had a
top.
handle on the top.
Yeah,
It's portable if you carry 80 pounds in one hand, dude.
of course.
Yeah, everything's portable at that point.
Get
Even your
my,
car.
I
Even your
get,
car.
I get my Apple workout. Bump you up.
Yeah. For sure, Arnold. For sure.
Oh, anyways. So, but no, anyways, yeah, Apple. I think Apple has traditionally at least been one of the guys to quickly adopt new standards. Recently, of course, once again with USB, they were the first to adapt the USB 3 Type C standard. And one of the innovations with that, at least, is that unlike other USB, other
USB ports.
yeah, other
USB
ports,
C.
yeah,
Is,
USB C, you can actually flip it either way, so you don't have to worry about like breaking any specific parts on, like in the port or with the wire itself. So, but I mean, USB aside, I think Apple, yes, it may not be the great inventor, but it is the great innovator. And by Google and Tesla coming out first and doing all this research for Apple, lets them, I mean, makes it easier for them when they push out their product.
hopefully, time will tell. I mean, really, if Apple wants to wow me with a car that can fly, or soar through the sky, go into space, go underwater, something like that. But at this point, I mean, I don't know. I'm not very I'm kind of jaded by all the self-driving cars and announcement of self-driving cars, and it's been announced for such a long time. Every single company is announcing a self-driving car. I'm like, come on, man. Like, show me a self-driving car, and then I'll get excited over it.
Hey, you know what? We were promised flying cars by the year 2000, and we're 15 years past the year 2000. Where are my flying cars?
Fuck flying cars. Jetpacks. Jetpacks. I want a jetpack. I don't care about a flying car. Jetpack everywhere. That's gonna be way more fun.
Well, anyways,
Poll. Start a poll.
let's look at the last week in review. Last Monday, stocks went up and continued to go down on Tuesday before sliding to the next 2 days and making up for some lost ground on Friday. Now, let's look at today's performance. All three major indexes were roughly at or close to dropping 1% on news of the good jobs report for last month's reportings, which came out last Friday. Normally, a good job report would be positive for the economy and good for stocks, but scared investors worried that the Feds may raise rates soon. This will impact bond yields and raise loan rates as well. Any comments?
I think a lot of people misunderstand the Wall Street as like basically like an index, a health indicator of the economy. It's not quite the same. Economic, like basically, Wall Street or the stock markets is a marketplace where people buy and sell stocks in companies, and these stocks are kind of like loans to companies. So it's an investment vehicle. So it's like a place where you put your savings, kind of. So economics is basically the measurement of the spending activity within a system. So in this case, is that the better, and oftentimes the Fed's job isn't so much to make sure that a lot of people are making money or profiting in the stock market, but to ensure that there's a healthy amount of economic activity in the system. So, for example, when people overspend, like everyone and their mom is spending money, it's like they're gonna die tomorrow. That's really bad for the economy. So, what do the Feds do? They basically make it so that a lot of people have incentive to save. So instead of spending, they're like, you know what? Instead of spending $1, we give you like a 5% interest rate on it, or maybe a 10% or 25% interest rate, and interest rate would be so high that people would basically, instead of spending the money, save. Now, why is this important? It's because when people keep spending dramatically, there's going to be a creation of bubbles, and these bubbles can burst, and there'll be expansions, and there'll be recessions, depressions. So the Feds, what they try to do is stabilize it so that our expansions aren't so great, and when we get recessions, that they don't go into a depression. So that's the Fed's job. That's why they try to use their most important economic regulating vehicle, which is monetary policy, which is interest rates, to basically manipulate that and basically control that. So as the economy is doing better and as people are spending more money, the Fed's interest is to increase interest rate to slow down the spending activity. Now the question is, well, what does economic activity have to do with the stock markets? As the Feds increase interest rates, then people who are now in the stock markets, which they have to incur a certain level of risk, and they were at a point of equilibrium, they were like, hey, you know what? Instead of putting it in the stock markets, maybe I can just take it out of the stock markets and put it into savings or whatever investment vehicles there are now.
Yeah.
And then, the stock markets will tank.
Nonetheless, according to Reuters, this is the worst performance in the past 6 weeks for the S&P 500. Mainly energy stocks have been pushing the entire index down.
Hey, good news for people who drive around though.
Yeah, well.
Good news for the economy, bad news for the people investing in the oil markets.
Well, so let's take a look at what's in our portfolios. A lot of the stocks I hold apparently are the same stocks that are being sold by a bunch of major investors. McDonald's, Microsoft, Coca-Cola, and others not in my portfolio had a good year, and many of these companies are cashing in on the rising stock prices. So, yay on the one hand, but since I'm a dividend investor, higher prices aren't necessarily a good thing because that means for the same dividend I get less of a share. But I guess it's overall good.
You're more or less a dividend reinvestor.
Well,
so,
yes.
Yeah, that's the point. But if you take the dividends out and reallocate it towards another stock, then it wouldn't be as bad.
Yeah, well. So let's take a look at some investing strategies. For some people, the idea of going through a broker and paying them to maintain your stocks may suck. That's why some companies allow you to directly own their stock. All you have to do is find out who their transfer agent is and buy from them. However, this doesn't necessarily mean that there won't be any fees. Check up their pages and read if these fees work out for you, or make sure you invest enough to make those fees less than fees you'd pay elsewhere, or at least worth it for your specific situation. Other things to note, other things to note is that when you directly own stocks, if they are voting stocks and they send you paperwork to vote in their company elections, you'd better vote on them, because if not, you're not participating in company ownership, and they will sell your shares on your behalf. So,
when they sell you shares?
I haven't had that happen to me yet. So
I haven't had that happen either. But
but you don't own anything directly. You own everything through a broker. That's different.
Ah, I see.
Yeah. So, recommendations. So my recommendation is the Bloomberg Terminal. If you want access to information and don't have time to organize and gather and all that stuff, the Bloomberg Terminal gives you everything in an easy-to-read manner. However, it costs a whopping $2,000 a month for an individual to get the machine and have access to all that stuff. So what do you do instead? You could try to make your own for about $1,000, much cheaper.
Is it $1,000 a month or a total of $1,000?
No, total for the machine.
Oh, that's not that bad.
Yeah, but here's the problem. You'll be missing out on a lot of functions if you build your own machine. First of all, most of the DIY solutions require you to grab information from Yahoo Finance or maybe from Google Finance, but they both have their delays and aren't real time. With Bloomberg, you get to choose the companies you want to keep tabs on and find out stories that are geolocated. You can get their financial analysis, look up information on people within the company, find out the supply chain of a company, and much more. Not to say you can get this information by yourself, but this makes it easier. I mean, much more easier, really.
That's great.
Yeah.
Yeah, I remember reading this article. I think one of the interesting ones was Fly on the Wall.
Yeah.
Their real-time news reporting for everything.
Right, yeah.
That sounds like an interesting service. Also, that makes you wonder, if you are executive of these companies, where is your privacy at?
You basically have none. I mean,
Huh? Mark Zuckerberg just used a urinal. He looks contemplative. Might be unhealthy for a few days.
he doesn't even give a crap about your privacy. What does he give a
Huh?
crap about his own for? Anyways, that's it for today's show. Just a reminder. Let me read this disclaimer again. We may not have ownership or other positions in the stocks mentioned on this show. Don't buy stocks based solely off of what you hear on this podcast, and always do your homework and research for investing in stocks.